Good morning, John. Thank you very much for holding the event and for moderating the session, and of course for inviting me to the session. I really appreciate very much being here. As you said, the banking industry entered the COVID-19 crisis in a situation that was better than certainly the 2008 crisis in a number of dimensions. Particularly, you mentioned the level of capital, the decreased trend on NPLs, and also I will also highlight the liquidity conditions of the banks entered the crisis with a liquidity coverage ratio of 149% on average, when the regulatory requirements were 100%. As of the end of the first quarter, they remain at 149% already in the middle of the COVID-19 crisis, which highlighted to us also the important measures taken by the monetary authorities to help manage the crisis. The banks also showed a fair amount of resilience as we went into confinement and teleworking, 100% teleworking, and operations of all financial infrastructure, not just from the point of view of banks, but firms, work properly. There were moments of tension, but overall, I think the working of financial infrastructure proved to be resilient, which was a good sign. After a first focus on making sure there was operational resilience, and from the point of view of regulators of alleviating any burdens that were unnecessary on the operational capabilities of banks, on our side, we interrupted the stress test that we're in the middle of running for this year. We're running every years, but we thought that now was the time for banks to focus on managing the stress that we're going through rather than working or responding to a hypothetical stress analysis like our stress test analysis. We substituted that for transparency information that we provided at the beginning of June on the situation of bank entering the crisis, and we will run the stress test next year with updated scenario and similar methodology that was planned for this year. As we go forward, as you said, the banks were confronted with a number of challenges prior to the crisis. You mentioned profitability, and profitability, of course, return on equity. Profitability has been a challenge in the European banking industry overall. The return on equity has been below the cost of equity for the last 5 years, and this is likely to continue to be a challenge going forward as the economic environment has worsened, and at the same time also the profile of interest rates going forward is probably for lower for longer than prior to the crisis. Second aspect that the banks had to engage with was important technological transformation in an industry that was going through a significant innovation phase and structural changes driven by, broadly speaking, fintech and new technologies. Banks had to adapt to their business models to the new environment, make significant investments, and as a result of the COVID-19 crisis, that need has probably accelerated the rate at which customers are familiarizing themselves with new technologies, particularly with telebanking and distance banking, at increased. So banks need to update their system even faster. And then the third aspect, which you also mentioned for particular countries, but I think it's broadly speaking applies to the whole of the European Union, is a significant structural change. There are pockets in which we think, as you said, profitability is low, but also pockets in which we think there may be excess capacity. And, we need to go through a process in which good banks succeed, good banks excel in market share, and not so good banks either adapt their business models or orderly exit the market. And that's a process that's difficult. It's going to take time for it to develop and support. Now, in the interim, we need to manage the crisis. Here, as we go forward, there are 3 issues that for us are of particular interest and concern and that we'll carefully watch. The first one is the interplay between, the economic condition and the exceptional measures being put forward by governments. Particularly, I'm thinking of moratoria, public guarantee schemes for exposures, which are probably more likely directly affect banks' balance sheets. We're closely monitoring to make sure that banks properly assess risk as they engage to reprofiling of their customers, and also as we assess how the different, particularly the public guarantee schemes, which in their nature are of have been national initiatives. Of course, they differ by country. Sometimes they even differ by sectors or counterparties within a country. So how that will interplay with the working of the banking sector, how many losses will actually if materialized, will end up in the balances of the banking sector, an area that we monitor closely. The second aspect that we are also very concerned and monitor as we go, given that, as I said before, many of these are national measures, that we do get proper functioning of the single market, and that cross-border flows, cross-border activities continue to operate properly. And then the third aspect is that banks do not forget, in the middle of this difficult situation which we are in the short term, the long-term challenge. Here, I'm thinking particularly of areas, I already mentioned technology, but we're thinking of particularly areas of ESG, sustainability, climate change. These challenges have not gone away. In many ways, again, they have become even more salient right now. And the third part, which I think is fundamental, is also cybercrime and financial crime more generally. We've seen, as a result of the sharp move to telebanking activities, that there's been a slight increase of cybercrime activity, and of course, as technology also interacts with telebanking activities, the likelihood for AML activities remains there, and they have increased. It's important that banks continue to be very prudent to very on those aspects. So those are, I would say, the short-term challenges. I'll also speak about the long-term challenges. And as I said, the good news is the banks have been, up until now, being able to contribute to absorb the shock, the health shock, the physical health shock with large impacts on the economy, I think to adequate channel credit to the economy and liquidity, and performing their role properly of assessing risk. It's important that they continue to do that as we go forward. And let me stop here, and I will be very happy to engage later on in the blogging. Thank you very much again for inviting me to be with you.
Thank you very much indeed, Mr. Campa. That's a really good survey of the issues and challenges for the whole banking sector going forward. I'm sure we're going to come back and pick up on some of your points.